All right, we are going to get started. Thank you so much for attending, and to everyone who's watching the recording, thank you so much for your time. This webinar we're calling CDR 101, and so let's start with just explaining what that alphabet soup means. So CDR is carbon dioxide removal, and we'll have four wonderful speakers today to share about different aspects of carbon dioxide removal. The goal here is if you are someone in a corporate setting or who's interested in helping reverse our changes to the climate and improve our world, that you'll be able to learn what carbon dioxide removal is, why it's important in a corporate setting and to the climate, and also how to go about purchasing it. So we'll go on a journey today. Tito will be sharing about what carbon dioxide removal is, where the market's at, a bit about the different types of carbon dioxide removal. Sebastian will be sharing about what policy you should know about. And Madeline and Sarabeth will be sharing buyer experiences and strategies and how they go about purchasing carbon removal or arranging portfolios, the actual what and how of how to do it. And so starting with Tito, Tito Jankowski is the CEO of AirMiners, also brings a lot of energy, momentum to the space. So we're really happy to have him. Sebastian Manhart is the Senior Policy Advisor of Carbonfuture, also podcast host for CDR Policy Scoop, wears a lot of other hats as well. Madeline Schell is with Haveli Investments and advises many companies in their portfolio on carbon dioxide removal purchasing and sustainability strategies. And Sarabeth Brockley is with us from Wild Assets. And so we're going to get started with Tito. You can dive right in, start sharing your screen, and let's get right into the content. And like I said in the beginning, feel free to drop questions in the chat. I will be sharing questions with the speakers. It's really good to have you all. All right, Tito, go ahead.
Awesome. Hey, everybody. Great to see you all. I see people from around the world. Great to be with you. As we said, I'm the co-founder of AirMiners. I'm calling in from South San Francisco, California, and my job today is to give you a overview of the carbon removal industry. So we're at a critical moment in time for carbon removal. You're all here as leaders in solving for climate change and enabling the scaling of this industry to reverse climate change. And we're all here this week because we've just reached 425 parts per million of carbon dioxide in the atmosphere. And there is this $1 trillion industry emerging to remove it. And so this chart shows why. The white line on this graph, the line that keeps going up, this is business as usual. That's carbon emissions if nothing changes. And as a civilization, you know that we've been putting carbon dioxide into the air for a really long time. We're still adding a lot of carbon dioxide. The red line is decarbonization only. That's all of us working really hard on reducing emissions. That's electrification, solar panels, wind, the works. The reason we're here today is we can't hit climate goals with those reductions alone. Multiple scientific assessments, including the IPCC, have the same conclusion that to keep warming at 1.5 degrees of warming or even 2 degrees of warming, the world needs to remove billions of tons of carbon dioxide per year by mid-century, in addition to steep emission cuts. So on top of all the electrification and nuclear and all the other things, we need to also remove carbon. Decarbonization alone doesn't keep us at that yellow line. That's 2 degrees of warming. So the gap between the red line and the orange line, the yellow line, that's why we're here today. So to close that gap, that's where we need carbon removal. And there's a new model from RMI and the Bezos Earth Fund that says to be on track for those targets in 2050, we need to be removing 285 million tons of carbon dioxide by 2030, which is just 4 years away. And the last year, we removed about 1 million tons or a couple million tons. So we need to get moving to remove a lot of carbon removal. So a bit about AirMiners for context. AirMiners is best known as an ecosystem player in carbon removal, and we support in two main ways. We support entrepreneurs in our startup accelerator, and we support corporate sustainability leaders through our Buyers Club. Our accelerator program has graduated 227 startups that have gone to raise more than $250 million and counting. One of our teams won in April the grand prize for the Carbon Removal X Prize. So these graduates are super impactful, and it really gives us perspective on everything that's going on in different methods of carbon removal. We've had teams that sell to the biggest customers, to the biggest programs in carbon removal, even on the cover of the New York Times. So let's talk about the main types of carbon removal. You can think about you're going to hear a lot of different terms, but it falls generally into four big buckets. The first is biomass-based carbon removal. And when I say biomass, it might be the first time you're hearing that term. Biomass refers to like stuff made with plants. So plants grow, they soak up carbon dioxide, they use sunlight to soak up carbon dioxide, and you can think of that as biomass. So one big source of biomass, for example, is farm waste. Within biomass removal, there are three broad categories of carbon removal. One is biochar, which is generally taking farm waste, turning it into stable carbon, and then putting that stable carbon into soil where it improves farming and agriculture. The second category of biomass-based carbon removal is bioenergy. You might have a bioenergy plant coming up in your region, or you've heard about the topic. This is using biomass for energy, so using plant material for energy, and then capturing the carbon dioxide and storing that underground. Then the other category of biomass removal is bio-oil, biomass burial, other biomass storage pathways. So you take the plant material, you can inject it underground, you can store it in other ways. The second of the four big buckets of carbon removal is direct air capture. You might have seen these before in like the New York Times. This is a thing that looks like vacuum machines for carbon dioxide. I was talking to somebody for the first time about carbon removal, and they told me once they're like, when I was in kindergarten, I had this idea. What if we could build a vacuum machine for carbon removal? And I was like, well, that's what we're doing. That's it. That's direct air capture. So these are machines that are sucking carbon dioxide from the air, separating out the carbon that's naturally or that's in the air, and then storing it underground. Um, the third element is enhanced rock weathering. So it turns out that rocks, like the rocks in your backyard, can be really good sponges for carbon dioxide removal. And so this method is accelerating that. So rocks kind of slowly soak up carbon dioxide, but if you can grind them up, you can treat them in other ways, you can speed that process up. And so rock weathering is this process that involves that. The last broad category are marine approaches. So these are all these things that happen in the ocean, things like ocean alkalinity enhancement, seaweed sinking. There's these early biomass concepts that are really promising, and you can even hear that some of them they kind of can sound like things that you see on land, but instead they're doing those processes in the ocean. And if you're hearing about this for the first time, a question is like, what's actually popular with buyers? What's actually popular with investors? So biochar, the first one I talked about, that's the workhorse of today. So last year, biochar represented more than 80% of the carbon removal deliveries. So 80% of the carbon removal that's actually happening was biochar. And this includes names you might have heard of like Eximad Green, Varaha, many companies in the global south where they're taking biomass and turning it into a resource for farmers. Biomass to energy is also really big in the news at a large scale. There are these multi-million tons bioenergy and carbon capture deals. You might hear this referred to as BECCS, but it's basically you're taking biomass, turning it into bioenergy, then doing carbon capture. Stockholm Energy and Ørsted are notable examples here. And then on the biomass storage side, you've got CO280, Volta Deep. Our friends at Rewind are working on that pathway. Direct air capture from a buyer perspective, from an investor perspective, really captures a big share of investment. So it's people looking forward and saying, hey, what are the up and coming solutions that could really scale? That's where direct air capture comes in to the portfolios. That includes Climeworks, Heirloom 1.5. They have pilot plants coming up in Iceland and the United States. And so there's a lot of excitement around that. Rock weathering and marine approaches, these are at the stage where they're moving from pilots to starting to get deals. Companies like Teradot, Undo, InPlanet, and Mati are starting to grow these rock weathering and marine solutions. Planetary just announced they had done the first independently verified ocean alkalinity enhancement credits with buyers. And so that was, a real milestone for that category. So it's in terms of things that are popular, biochar and biomass-based pathways are they're delivering today. Director capture, rock weathering, and marine carbon are things that are exciting from a kind of up and coming perspective, and everything really looks across volume, permanence, and cost. So, lastly, a quick note on what the biggest bottleneck for carbon removal industry today is. Again, we've supported more than 200 startup companies. So you might expect me to say technology or cost or investment or things like that. Those are massive challenges. The biggest challenge facing the industry right now is slow buyer engagement from the beyond the early leaders, right? So beyond the Microsofts and the frontiers of the world. The market is growing, but the number of new purchasers isn't growing very much. And so the bottleneck right now is that demand from new people and new participants. Now, one thing I want to point out is if you look at why current participants are purchasing carbon removal, it's not just because of altruism. So if you look at Microsoft, for example, they've committed to being carbon negative by 2030 and removing all their historical emissions. But Microsoft uses these deals to manage their long-term climate and regulatory risk. They're building deep technical and procurement expertise. They've got a whole team of people now that know how to do this, and they can apply that for their customers, for their conversations with regulators. This is something that can actually tie more into their core business than you might think. One other example is Boston Consulting Group. They've pledged to neutralize all of their emissions by 2030. They've bought tens of thousands of tons of carbon removal, and it's a way for them to get this firsthand experience with carbon removal so they can advise all of their clients. So it's great for their business advising big Fortune 500 companies. So that's the type of value proposition that your company can bring back internally. And so that's where this can fit into to your portfolio and your company. I mentioned our work on supporting carbon on sustainability leaders. And so a lot of companies are interested in carbon rule, but they get stuck on this. And so we've started a AirMiners Buyers Club where we facilitate these expert vetting processes, lowering transaction costs, getting you like the internal capability to meet these teams, understand what's happening, and also join into larger deals. And so if that's something that's interesting to you, I'll have my email at the very end. And so in closing, four things: carbon rule is not optional; it is necessary alongside decarbonization, and it's needed at the scale of billions of tons per year. The second is the startup ecosystem has accelerated rapidly over the last couple of years. There are hundreds of companies and hundreds of options to do this. Um, Key things are biomass-based pathways are leading the way in terms of what you can buy today, whereas director capture and marine and rock weathering are really exciting as up and coming methods that you can get involved in now. And the last thing is the biggest bottleneck is demand, and that's in terms of you're here today, and more companies like you stepping in makes a huge difference. And so if you're on this webinar, you're ahead of the curve. It can be an opportunity for your company. It can be an opportunity for your own personal development, and really look forward to any questions or hearing from you as the rest of this webinar. Thank you.
Thank you so much, Tito. You answered so many of the audience's questions while you were speaking, which is great. One question overall, how does carbon dioxide removal, how do those credits compare to nature restoration credits? What's the difference? Is there overlap?
Yeah, there's some overlap. So if you think about, you may be familiar with nature restoration credits, you may be familiar with carbon offsets or things that have to do with, hey, we built a bunch of solar panels. The easiest way to think about kind of what carbon removal is it refers to anything that's pulling carbon dioxide out of the air that's already there. So a nature restoration project might do that. For example, restoring a forest and enabling that forest to soak up more carbon dioxide, then that can be seen as a carbon removal project. But that's the main differentiation is the project kind of holding things as they are, in which case it's carbon neutral or it's a carbon offset, or is it sucking carbon dioxide from the air that's already in the air, in which case it's a carbon removal. And so the importance of that is we need both. We need decarbonization and removal now.
Mhm. Yeah, thank you so much. It's really clear. All right, this transitions really well into what Sebastian will be presenting today, which is policy and part of what is creating the demand. So, Sebastian, over to you.
Yes, I've just requested being able to share. There you go. Okay, hello everyone. I've been asked to give kind of a global CDR policy overview in 10 minutes, which is challenging, but I'll try my best to cover a lot of ground. And there's a lot of points that follow directly from what Tito was just presenting. Maybe briefly about me. I guess call myself a policy entrepreneur. I try to convince governments around the world to invest more money into carbon removal and do this through a bunch of different channels, which you're happy to check out. Maybe particularly interesting if you're in policy, subscribe to our podcast where we have kind of weekly deep dives into different topics. Um, there you go. Starting here, just a very brief overview of kind of who are the leaders, who are the movers and shakers. Most of the exciting work nowadays is really centered on the policy level in Europe. So you see a lot of concentration there of kind of front runners. Until a year ago, I would have put the US here as well, but I'm going to talk about in a second why I don't think they should be categorized as CDR leader anymore. And outside of Europe, Canada and Japan are also pretty interesting. I don't have time to dive into all these countries today. Reach out to me if you want to talk about them, or feel free to ask a question after. I have to talk about the US briefly, even if they're not a leader, because they were, and because until recently, I mean, they account for a third of job growth in carbon removal, most of investment, most buyers. So we have to talk about the US. At the high level, climate has taken a huge hit, right? Like the US has already left the Paris Agreement. They're starting to boycott multilateral negotiations, such as the IMO that happened around a month and a half ago. And we're seeing the US just not just retreat, but really attack climate science and climate policy. How this plays out, I have this traffic light system, and there used to be quite a bit of green. Now, the best I can give you is a couple of yellows. But the way that I think about it is we have federal climate policy, which is obviously right now non-existent in the US. We've got federal CDR policy, and there we've had some huge setbacks, some very big programs that I'm going to talk about in a second being scraped. But at the same time, there's still some stuff going. We have, for example, the 45Q tax credit, which gives you $185 for every ton of CO2 removed through direct air capture, the vacuums that Tito was talking about. And you get money directly from the government, and that is staying. You still also have perks, well, benefits, subsidies for farmers who apply biochar to their soils. So we still have some stuff going, but unfortunately, a lot of big stuff was cut. Some states, first and foremost, I would say California, are still moving forward with interesting policy, and there's still some potential there, which is why I left them. And Department of Energy is probably which took the biggest hit. They fired all their staff working on CDR, and they canceled the direct air capture hubs program, which was globally the biggest $3.5 billion program to really invest into direct air capture. And it's also, a public purchase price that everyone was very excited about. That's all been canceled. And then the Department of Agriculture as well. There was a lot of exciting stuff in the works around, for example, support for enhanced rock weathering for other agriculture-based methods, but a lot of that is not proceeding. So, just quickly to cover it, let's get to the EU where positive stuff is happening and where a lot of my work has also been focusing. In the EU, for some of you, this might be repetitive, but at a high level, we've got what's called the EU Green Deal. And the EU Green Deal covers a lot of things that you see here, but one important pillar of it is achieving climate neutrality. And so we've got a 2050 climate neutrality target in Europe, which applies to all 27 of its member states. And then we've got intermediary targets, 55% reduction by 2030. And as of the day before yesterday, we've got a firmed up 90% reduction target for 2040. So we have a very clear path. In terms of how we get there, there are three vehicles that Europe uses, three highways for net zero. And it's useful to hear them once because you're going to hear them probably many times, potentially abbreviated. One is the Emission Trading Scheme or ETS, one is the Effort Sharing Regulation or ESR, and one is the Land Use Change and Forestry or LULUCF sector. The ETS is the biggest, and I'm going to come back to this, compliance scheme in the world. So companies, especially heavy polluting companies, already have to pay a price. They have allowances still, but an increasingly higher price on every ton of carbon they emit. This covers already 40% of all emissions in Europe, and it will soon cover 60%. So it's a really big beast. The ESR covers all the other, all the other sectors that are not covered by the ETS, and they're managed at member state level. So member states have sectoral targets for all the ESR sectors, but gradually we're shifting more and more from the ESR into the ETS. This is important because between the two, that's 100% of emissions in Europe. The LULUCF is supposed to be a sink, a very big sink of carbon in Europe, but it is increasingly turning from a sink into a source because of climate change in many ways, and also because of land use. And so increasingly, we will rely on other sources to store carbon. The four things that are really exciting to know about. The first is, and I'll go quickly here, but these are worth knowing. The first is the climate targets. You might have heard that Europe just passed a 2040 climate target, and it is a huge deal for CDR. It mentions CDR explicitly as a key tool to achieve the target. It says that it should be integrated into compliance markets. And also, interestingly, it sets a big target for international credits, which could also be really positive for carbon removal companies and carbon removal demand outside of Europe. Then we've got the CRCF, which is the first ever government certification scheme for removals. So essentially, there will, as of next year, because this has flown through the legislature, as of next year, there will be carbon removal credits with a European stamp on it. With its own standards and everything. So again, this is a huge deal in creating trust. And then we can use these CRCF credits in all these other avenues, such as the third thing, which is procurement. Europe wants to both be a buyer and unleash private buyers in Europe of CRCF credits. And there's been an interesting workshop that happened last week on this topic. And finally, ETS integration. And this is the one I'm going a bit deeper. And everything Tito was describing earlier is the black box in the top left. And that's good to let that sink in because the VCM or the voluntary carbon market, which is carrying carbon removal forward, and we should be very grateful for it, is a drop in the ocean compared to compliance markets. And the European ETS is 750 billion on its own. So integration into compliance markets, which is at this point a political given, is a huge, huge deal. And there will be a proposal from the Commission next year in July of what this could look like. And the earliest in Europe would probably be 2031. But knowing that CDR will be integrated, how, which, how much, will allow corporates to get moving because if you need credits for 2031, you probably don't want to buy them just a year before. But this is, I think, the big demand side step change that everyone in the industry is really looking forward to. Finally, I've been asked to say a few words about the SBTI, the Science-Based Targets Initiative, which many of you obviously are familiar with. There are thousands of companies that have a target against the SBTI. And that's been a big discussion topic in carbon removal because historically, SBTI has not really addressed CDI at all. It basically told companies reduce, reduce, reduce. And when you get to net zero, only at that point, you should use some carbon removals for roughly 10% of your emissions. That is not science-based because we now know from the IPCC that we actually need to scale carbon removals in parallel to emission reductions. Otherwise, we have no chance. So there has been this process for the last 2 years to update the so-called net zero standard of the SBTI to integrate carbon removals and give them a proper role. Initially, this looked very promising. However, the first draft released in March was bad. The second draft released a few weeks ago is terrible. And now we are left to see, I mean, the consultation is open until the 14th of December. We're left to see what will come out at the end in January or February when they release the actual version 2 of the net zero standard. But basically, to sum it up, before 2035, there is no reason whatsoever for, according to the current standard, for an SBTI company to purchase carbon removals, which is not great news, especially for all the ones who actually want to already purchase carbon removals. After 2035, there are kind of these optional recognition tiers for companies where they get recognized if they buy carbon removals, but they don't really have to. And only at net zero, they have to buy carbon removals. And even there, there's a very odd definition of the split between durable and temporary removals, which, without going into the details, unless you want me to, is not really aligned with science. So there's been a pretty big uproar by the CDR industry, but frankly also by a lot of corporates and academics, because what seems to be happening here is that the SBTI is really focusing on retaining as many corporates as possible versus setting the kind of roadmap and milestones that would be needed to call itself really science-based. So it's a tricky topic, and I still hope that there will be some changes and that they will listen to some of the uproar that has been happening. But as of today, it's fallen way short of what many people were hoping it would be doing. Maybe to say one final thing, there are other standards and for corporates that are emerging. And the ISO, for example, which everyone here is surely familiar with, are developing their own net zero standard, which will also come out next quarter. So we will be watching that as well, because that could, in some ways, fill a gap that the SBTI has kind of created for itself. Um, and with that, over to you in case you have any questions.
Great. Thank you so much, Sebastian. You covered a lot in just 10 minutes, which was amazing. I think a really great overview of what's going on with policy. Um, the figure that you showed with voluntary carbon markets compared to what's coming up just in EU compliance markets was very striking. And you mentioned that the timing of that will likely be in 2031. However, we do have some audience members that are wondering like why we don't have a mature market of carbon removal in Europe, but that's clearly developing and it's happening, and CDR purchases are happening already in Europe. So why do you think that there's this perception of that there's not a mature carbon removal market when there are signals of maturity happening? What are your thoughts?
I don't think carbon removal anywhere in the world is a mature market.
Mhm.
A mature market doesn't have 80% plus of purchases from a single company, which is Microsoft, right? Like carbon
Mm.
removals is not a mature market. It's a nascent market in the early stages that was created 5, 6 years ago, for which hundreds of companies have emerged. Probably 10, 15,000 people work in it. It's not a mature market. So I would challenge that assumption. Then I would say that there's a lot of incredible things happening in Europe, both on the startup scene, but also if we look at funding. Now I can maybe quickly go into it in my answer. Germany's just committed 500 million euros to carbon removal, literally 2 weeks ago. Denmark is spending the equivalent per capita of the US spending $300 billion on carbon removals. They've spent billions of dollars, and they're a small country, right, on different types of carbon removal. Sweden is doing so. The UK is doing so. So I would say it's a nascent market with significant tailwind and signals in Europe
Mm.
that will hopefully make it mature.
Great, thank you. And then one more question. How does Article 6 promote carbon removal?
So there are broadly three markets, right? There's the VCM that kind of Tito presented a lot about. There's the compliance markets, which I introduced, and then there's the UN markets, right? And those are the three. Right now, carbon removals are only happening on the VCM. I painted the picture of what it could look like in compliance. Increasingly, we're going to see also countries trading removals directly under the UN mechanism, which is 6.2 and 6.4. Right now, that one mechanism is already operational, and we're seeing countries strike deals, such as Switzerland. They're already done 15 deals, including one on durable removals with Norway. And the other mechanism is still in development when it comes to durable removals. So I expect that they will play a big, big role, but more in the kind of 5 to 10 year time frame. For example, the international credits that I spoke about that Europe wants to procure, that will be under Article 6 in the 2030s. But until the 2030s, the UN is still going to be really in build up.
Great, thank you so much. Would love to end. Thank you so much for that presentation, Sebastian. I'll pass it on now to Madeline, who's going to start to share about what it's like from the buyer side.
Are we up and running? Okay, great. Well, first of all, thank you for including me in this lineup. It's awesome to participate along with the other panelists here. Um, I can do a brief intro to get things started. I'm Madeline Schell with Haveli Investments, which is a private equity firm based out of Austin, Texas, which maybe you, if you know the skyline well, have deduced, but if not, there's a little intro. And we invest entirely in the technology sector and specifically software and gaming, so enterprise size companies in these two sectors. So I like to clarify that we are not an impact fund, not a green transition fund, just an enterprise software buyout firm that has a particular interest in supporting our companies on a sustainability strategy. Um, and so we know that the technology sector is not the highest emitting sector, nor is it the hardest to abate, but we believe that it will play a critical operational role in the future net zero economy. And it's imperative that these companies kind of take the first step in decarbonization and carbon removal procurement. As we've talked about here already, one of the largest purchasers of carbon removal is Microsoft, with roughly 4 out of 5 tons being purchased by them now. And kind of the tier of companies following after that is other large technology companies, because quite frankly, they have the budget and ability to pay right now. I think there's a really interesting carbon gap report out there about how the companies who have the highest ability to pay have the lowest emissions, and the companies who have the lowest ability to pay tend to have the highest emissions. And so we're kind of at this impasse in terms of scaling the market. But it's really critical that these technology companies kind of start the trend of incorporating decarbonization into their business plan. And I often get asked why we take such a fine focus on sustainability at Haveli. And one is for just the reasons that I mentioned, but also because we believe that we are here to take companies from good to great. That's kind of the ethos and motto of what Haveli does. And we believe that great companies in 5 to 7 years from now will have their sustainability house in order, will have strong reporting mechanisms, they'll respond positively to customer RFPs, and they'll really kind of set the bar within their subsegments on what it means to operate as a sustainable company. And we're here to help them through that, kind of maybe before some of the regulatory pressures hit them, but scaling towards those things. And we hope to allow them to embrace shareholder and stakeholder expectations rather than kind of hurrying up to meet the growing regulatory and reporting requirements that are out there. And so, how do we do these things? Haveli takes a very hands-on approach to working with our portfolio companies. We kind of do our initial screening and due diligence of companies as we're considering an investment in them. And part of that is understanding their maturity on sustainability, how they compare to their peer segment, and what are opportunities to get started with them once we're in their ecosystem. And kind of the first step is appointing a directly responsible individual to work with us at the business. Oftentimes, our portfolio companies don't have a head of sustainability or even someone working fractionally on sustainability. So carving out just a small piece of someone's job to work with us on sustainability is a super critical first step, and also just kind of assume some amount of responsibility of that individual to their company. And we provide a lot of educational materials to get them started. We don't expect them to know all of the things that we're asking them to do, and that's why I have a job. So I work hand in hand with them to get started. And we also enable them to be successful. So we take a very narrow definition and approach to sustainability. It can mean a lot of things. You can talk about biodiversity and nature and water and plastics and recycling, et cetera, all very important components, but we take kind of a initial focus on climate and carbon and emissions, and getting our portfolio companies up and running with a scope 1, scope 2, and scope 3 carbon emissions inventory. And we provide them a technology accounting solution to calculate that inventory. and then understand what's driving their emissions. What are the hot spots? Are they working with certain suppliers that highly contribute to their emissions? Is there an office that is highly contributing to their emissions? Is it business travel? Understanding what the different components of their footprint are, and then understanding opportunities for reduction, and then ultimately scaling a budget for carbon removal purchasing. So that's kind of the life cycle of how we work with them. And then second to that, everything that we ask our portfolio companies to do, we do at Haveli. So we've been calculating and reporting our emissions as a firm for the past couple of years. We've been purchasing carbon removal credits to fully offset or zero out our Scope 1, Scope 2, and Scope 3 emissions. We started reporting our Category 15 emissions to drive accountability through our portfolio companies. And then not on this slide, we also have a foundation that supports large-scale restoration and biodiversity preservation. So that's kind of an overview of Haveli, what we do at a firm level, and how we try to push that down through the funds and the portfolio companies. Moving on, I think it's helpful to talk like really specifically about what we mean by purchasing carbon removal, because it is a pretty confusing process. It's like both scientifically complex to understand, and then as we've talked about here, the market isn't fully mature at this point. So understanding how to interact with it, what partners to trust. And I'm excited for Sarabeth's overview of kind of the different components of a cost of a credit and understanding what drives those things. I think it's important to kind of talk through how we specifically make recommendations or support our portfolio companies in purchasing a carbon removal portfolio of credits. So I'll do a quick run through in case anyone here is less familiar with kind of how we think about the scopes of carbon emissions. So scope 1 is a company's direct operational emissions, so resulting from the combustion of gases in owned vehicles or office buildings, et cetera. And for the types of companies we invest in, that's a very small amount of their total portfolio. And so we recommend matching it with a more highly permanent CDR solution, such as the ones that Tito mentioned earlier, biochar, direct air capture, ERW, et cetera. And this kind of creates a nice price geometry matching a lower portion of a company's emissions with a typically higher cost solution, but it ensures highly permanent storage of that carbon that the business is directly responsible for emitting. And then scope 2 is purchased electricity, so turning the lights on in your office or an electrical fleet, et cetera, and matching this with renewable energy. I know that's tangentially related to CDR, but kind of a like for like matching is how we think about structuring a portfolio, and it also kind of helps balance cost. And then scope 3, nature-based CDR. So all of the CDR pathways we've been talking about thus far are how I refer to as engineered CDR. So there's some form of human intervention that's either speeding up a process or creating a process entirely to suck out carbon and store it permanently. Nature-based CDR is, I think there was a question around this at the beginning, but this is more reforestation, afforestation, kind of promoting nature in sequestering carbon on its own. And so scope 3 is typically the largest portion of our portfolio companies' emissions from their supply chains, from business travel, et cetera, and matching this scope of their emissions with a lower cost carbon removal solution, such as reforestation, but still sitting within that removals ecosystem versus an avoidance scheme, et cetera. And so that's kind of how we go about structuring a carbon removal purchase, because it nicely balances cost with volume of credits purchased. And it also directly matches the permanence of the carbon removed with the direct ownership of the emissions from the organization's perspective. And we typically start small. So I think there's kind of this conception that you have to do something big to be catalytic. And I think the market is still so small that small and medium-sized companies making small and medium-sized purchases is still super catalytic, and it shows that this can be done and is really important within smaller organizations. And so we start with just parts of a portfolio company's emissions and scale that to a larger amount over time. We have a broad ambition of delivering a net zero portfolio by the exit of Fund One, meaning by the time we exit a portfolio company, we will have worked with them to purchase an equivalent amount of carbon removal for their emissions in that year of exit. And so, kind of leading up to that timeline, we work on smaller purchases throughout our hold period and really directly partner with our portfolio companies on constructing those removal purchases. And some drivers for this is a lot of our portfolio companies are getting questions about from their customers about how they manage sustainability. And we found that if you're able to take a very proactive approach to responding to those customer questions and saying, this is what we do on an annual basis to kind of safeguard our sustainability strategy, it's super effective, and customers respond really positively to that. And it's also makes it a lot easier on your sales team when you just have this like one uniform material that you can share with your customers about how your organization thinks about sustainability and how it manages opportunities and risks. And then I already said this, but start small. You don't have to, make a full net zero purchase for your entire supply chain and scope 1 and 2 in year one. Pick portions of your business that either tell a narrative. So maybe it's abating the emissions of the headquarter office of your operations, and that's like a super cool narrative component to your organization. Or maybe it's business air travel because you're a consulting firm that travels a lot, and so that feels like what you directly own from an emissions perspective. Start with something that has a narrative component and start small and scale that over time. And lastly, use the ecosystem. So there's organizations like AirMiners and what Tito's doing. There's a lot of marketplaces out there. There's brokers, etc. You don't have to start from square one with trying to, create an RFP for carbon removal credits. Work with the vendors and the smart people out there that have already gotten started on this work. And then maybe your procurement process scales over time. There's a lot of resources out there. It is still a bit of a confusing market, but there's people who are figuring it out. And so work with them. I think this industry is very collaborative, and everyone succeeds when we're working together on this stuff. So we try to be highly collaborative with our portfolio companies and connect them to different ecosystem players. So I don't have a questions slide, but I will stop there for now.
Yeah, thank you so much, Madeline. I think the way that you explained on the second slide how to structure a CDR purchase and really how to tell the story to the customers of that company was really helpful. One question for you. Could you share one example of a portfolio company that you're excited about that you helped shift into a sustainability strategy or into carbon removal purchasing? Kind of like a favorite child, I guess you could say.
Sure, yeah. I mean, we're really excited about all of our portfolio companies that have embraced this and gotten started on this. We have some portfolio companies that are super interested in supporting geographies in which they exist and operate. And so it's been really cool and interesting to partner with those portfolio companies on, and it's also heightened my understanding of carbon removal markets in different geographies, and partnering with them to kind of tie the environmental and sustainability component to kind of the ethos and values of their companies, and particularly supporting regions and businesses that are located in their same country of domicile. So that's been super interesting. And then I guess Secondly, we've gotten feedback from portfolio companies around like, hey, we did this, and then we realized how many of our customers were actually asking about this, and we hadn't really been giving answers. And now we have this report that details what we're doing, and it's like amazing. And we're
Right.
able to just hand it out. And a lot of our customers are impressed that we've kind of gotten started on this work. So it's great when things that you're asking your portfolio companies to do are actually helpful for them
Yeah.
beyond just what we would like them to do.
Yeah.
So I would say that's probably a highlight.
Yeah. Sounds like really, really high impact. Thank you so much, Madeline. Passing it on to our last speaker, Sarabeth, from Wild Assets. Feel free to start sharing your screen. Thank you.
Hey everyone, just checking you can see
All
a
good.
big green space on the screen. But I think in the last 10 minutes that we have on the webinar, I'll try to get through what is quite a big remit of the larger investable carbon removal landscape. But kind of as a way of working, my name is Sarabeth Brockley. I'm a partner at Wild Assets and operated in this ecosystem as the former head of carbon strategy at NASDAQ. And before that, the Carbon Pricing Leadership Coalition, which gave legs to Article 6.3 and 6.4, the equivalent of multilateral carbon market pieces at the United Nations before looking at how we get into the investment landscape. So this whole point of like where we build governance, infrastructure, and investment logic behind high integrity carbon markets, it does mean making sure that market makers, multilateral institutions, and companies and corporates are all talking to each other and continuing to evolve the landscape. So I've been tasked today to kind of walk you through a simple idea of how transforming this particular piece that's very important to me is a part of the carbon market approach that I think is going to be a part of the future. And that's where we don't really just see CDR as a commodity, but it's the next major asset class and climate management. So I would like to scare you all with this slide. Wow, it's like the last speaker of the webinar, and she has one big confusing thing to kind of communicate across. But there's a madness and a method to this purpose. And I think when you look at buying carbon removal, you're not really just buying a ton of CO2. You're entering into a climate asset class where it has capital costs, risk layers, durability profiles, and return curves. And one thing that we think a lot about at Wild Assets is like, how do we get this to a kitchen table conversation so it's not as difficult to engage in this space? But that does really look at, do people know what some of the inputs are that give us an internal view of what that asset looks like? So here you'll see everything from project CapEx and OpEx to certification bodies, buffer pools, insurance fees, issuance fees. And ultimately, at the end of this, it's meant to be a profit tool for the suppliers, and then certainly for companies who have to decrease their carbon impact on the world. How do they turn that into a reinvestment strategy and then demonstrate ROI? So typically, if you want to act as an investor in this space, and any type of like climate stability, this is your blueprint. And we were joking right before we got on the call, and Tito is making not fun of it, but he was just like, "Gosh, wow, this could almost be a Halloween costume or something that we joke about internally as a part of the carbon market." But this is it, folks. This is what I look at when I look at carbon removal projects, and this is what I'm thinking about from a unit economics point of where Wild Assets see its role to kind of help organizations not behave typically just as carbon buyers, but as allocators into this asset class and moving it forward. So it's not just constructing portfolios of climate assets with defined risk, maturity, and benefit profiles, but it is trying to help kind of go through this line of question that Jessica had like sent over to me, is like, how do we look at it into different types of investable categories? Or when a corporate thinks about it, because that's what they're doing, they're making an investment in either decreasing carbon in the atmosphere or decreasing some type of risk margin on their budget line. And that goes into different pieces, and I'll kind of classify them as maybe infrastructure backed removals. So you have like all of your direct air capture, mineralization, biomass, and geologic storage in that space. Engineered nature hybrid removals, so it's biochar, some regenerative biomass pathways, and then methodology first assets. And that's like really like blue carbon, like where we see a lot of like the marine CDR spaces moving forward. And within each one of those categories, this space kind of goes through what looks at high capex, high durability, what the frontier market can look at as an upside, and where that might behave more as an infrastructure or a growth equity investment, all the way down to what could mirror early stage venture and climate investments. So I just want to acknowledge how complicated this space can be for people who are looking at it for the first time, and let you know that you're not alone. There are places to kind of source these specifics, and Madeline and Seb and Tito gave a really good overview of what it looks like to understand that project developers can be the operators of this world, and maybe aggregators and asset managers. So like where wild assets comes into play, help make sure that registries operate in this way as an exchange, right? So work at NASDAQ, what does it look like to have like a stock exchange for carbon markets where assets are listed, can be bought, sold, and traded? And when you look at a cost stack map like this, you're looking at things that are anywhere from a mature asset class that operate for that lower allocation to research and development, that have a low MRV uncertainty and have delivered credits before. And then on the flip side, something that represents more early stage climate assets, which require larger R&D spread and methodology spend and higher buffer requirements, and then ultimately higher uncertainty. But what you get at that space is you can demonstrate higher uncertainty with higher ROI. It does give you a higher price per ton, but the art of the negotiation for a contract, you can, as like Madeline said early, if you start small, you can start making strategic investments in this space without a huge impact to your bottom line portfolio. So when you're looking at carbon removal purchases, you're essentially looking at early stage climate investments, but as a choice rather than in a risk. I think we have like 3 minutes left, so I'm not really sure if I'm going to have time to cover registries and quality signals and how like differs between ratings agencies and other pieces. But I do want people to think about where carbon registries can operate as exchanges, and that's where you have some of the things you might have heard on landscape before, things like Vera, Gold Standard, American Carbon Registry. They kind of like tell you where these assets live, but not necessarily whether or not it's high quality or not. So when I look at something and I'm moving through, and I hate numbering and labeling things as gold standard, but there's a reason why Puro.Earth was acquired by NASDAQ as a kind of boost signal to the ecosystem of CDR. And that's because we need different types of removal focused registries to operate as premium exchanges. So if you have Puro.Earth, you have isometric, they can behave with higher rigor, higher transparency, and higher integrity. And we're seeing that type of leeway fall into what you look at when you're starting to think about carbon removal purchases. Market quality signals, like for me, like that is ACROA, that is the ICVCM when you talk about things like the core carbon principles, what will probably be future AAA climate ratings. If we're also looking to what Sebastian said before, the way that ISO is going to be moving into helping corporates understand what is good and what is decent and what is bad, we're continuing to evolve in this space. And those certainly aren't the only market players, but for the breadth of what we need to get through on this type of thing, I usually want you all to think like investors and ask yourself 3 questions when you're moving into a carbon purchase. And that is, where is the asset listed, right? So which registry is it on? Who certifies it? So is that a premium exchange space where it's Puro, isometric? Increasingly, I think Rainbow is like moving up in that space. And then what's the rating? And that can be a number of pieces that you feel like you can get invested into. But when you think about it from a financial markets landscape, you're really asking that this is no different from distinguishing from what are junk bonds, municipal bonds, and like AAA rated climate investments. Like we view the landscape the same way. And I think that's why first time buyers struggle. That due diligence process and problem is very overwhelming. But most organizations, I think, can face internal investment committee friction when they don't understand that this thing is what goes into deciding about how to approach CDR for the first time. And increasingly, unless you have an entire team of people at your beck and call at Microsoft to help you navigate through this, you see first-time buyers dealing with this a lot on their own for the first time. So how do we move forward, and how do people get help in this space? I think I always like to joke that Wild Assets, where you see the entirety of us, so we're a team of two, and my co-partners on the stage, Matan and myself, and we're looking to make sure that people understand that this price a kind of difficulty is not something that you should be scared of, but is part of the art of the negotiation, and to like step forward in that space as a first-time buyer. Um, in terms of like a little bit about like what Wild Assets does, and why we're doing what we're doing, we are hoping that buying carbon removal shouldn't feel like guesswork. So helping continue to bring space where we look at curation, evaluation, and structuring carbon removal portfolios and contracts. Make sure that we make that communication leap to how we structure these as real climate assets, and starting to speak that financial language and market language, so that you can continue to help buyers gain confidence. So when they see that big kind of sand key chart that I shared in the beginning, that they're realistically helping suppliers reach the commercial traction that they need to operate and grow, so that we have a carbon removal marketplace in 2027 and beyond. So generally think of Wild Assets as that kind of like first in early stage capital investor signal for carbon removal suppliers, and then looking to make sure that corporates don't think that it's so hard to buy, that family offices don't think it's so hard to buy, because you can start small. So my last piece is that I'll leave on: deployment does move at the speed of trust. You have a lot of people here on this call that you can trust to ask questions to, and the call to action that I'll offer is that if you're looking to purchase anything at the end of the year, there's a lot of places to do it. We're offering biochar at a helpful and reasonable price for like first-time buyers that we've seen market participants move forward in, and that's our biochar drop. So if you have questions about that, certainly feel free to reach out to me, and I'll kick it over to Jessica, and hopefully I know I stayed at time, but I don't know if we'll really have time for questions and the fallout. So.
Thank you so much, Sarabeth. Yeah, we don't have time for questions during this call, but we have some questions you may send over by email. And if you want to share your contact information directly, you're welcome to do that. Let me just remove this screen share. Just to wrap up, a little bit about Rewind. We're one of the many flavors of carbon dioxide removal that have been mentioned today. We specialize in unique biomass carbon storage. We're really excited to be very transparent, and to check the boxes of good quality CDR being scalable, permanent, energy efficient, measurable, and sustainable. And we're also really excited to hold your hand as you learn about carbon dioxide removal, as we've shown in this webinar today. So if you have questions, you want to learn more about how to decarbonize, you have questions you want to pass on to the speakers, we can refer those out as well. So please feel free to reach out to any of us on the team. Me, Ram, and Rona are here. Thank you so much for joining us. And if you're watching the recording, reach out to Jessica at Rewind.Earth, or go to Rewind.Earth to learn more about Rewind. Thank you so much. Thank you, speakers, Sebastian, Tito, Sarabeth, and Madeline, for your time today. And thank you to everyone who's on the call.
Thank you, everyone. Bye.
Thanks, guys.
Thank you all. See you later.